questions now, before I turn this over to all the other questions that were asked by our investors. I hope you can give us some light. Carol, you're also a vice president of AyalaLand. So let me take this opportunity. Effectively, this asset infusion, you're giving out the crown jewels of AyalaLand to AREIT. And AREIT, I understand, gives out 90% at least of its earnings to its shareholders, more particularly our investors, right? My question is, why is AyalaLand doing that? And is AyalaLand going to change now its strategy to just be a developer? Now AREIT will be the lessor. Is that how it's going to happen?
Okay, so when AyalaLand transfers assets into AREIT, actually AyalaLand is income neutral. It doesn't change really its position income-wise and cash flow-wise, because there are, when it transfers assets into AREIT, it may be reduced in terms of ownership of those assets because of the public float in AREIT, but AyalaLand also earns management fees in managing those properties, and it also has the tax incentives because of the REIT. So net-net, owning assets in ALI versus owning assets in AREIT will be the same, will be neutral for AyalaLand. And AREIT is consolidated into AyalaLand's income statement and balance sheet. So altogether, it still is within AyalaLand. We didn't get those assets and then goodbye, right? So it's really part of AyalaLand. I just want to clarify that. No? So AREIT is very much a part of AyalaLand.
Oh, yeah. Wow. Great. So it's a kind of a win-win situation.
Win-win situation. And in fact, the real benefit really is the capital recycling portion, because the REIT is another vehicle for ALI to fund its growth of new developments, new assets. And later on, as these developments get completed and be stabilized, then AyalaLand can then infuse them to AREIT. So it's like a continuing cycle, which I think I've shared in the another briefing, that we've actually experienced one asset that has gone full circle, because when AREIT did the IPO, some of the proceeds from that IPO was used to complete One Ayala. That's the development I mentioned at the corner of Ayala Avenue in EDSA. So it funded that development, right, because of the REIT. And when it was completed and now fully leased, almost fully leased, it was then transferred also to AREIT. So ALI actually is able to really recycle that capital and raise funding for its new projects, which will then also be infused into AREIT. So there's really that symbiotic relationship between the sponsor, AyalaLand, and the REIT.
Galing, galing. So that AyalaLand, that property is in the corner of EDSA and Ayala, no? That it was practically effectively new, di ba? So nagamit na yun. So the funding used from the IPO, build the building, now brought it back to AREIT. Now you're using that fund naman to develop again.
To develop new buildings later on, yes.
Galing, galing. Okay, sige. So let me just also ask this question. It is a question of a lot of our shareholders. Because of this asset infusion, you have to issue shares, di ba? So in exchange for this asset, you issue shares. Like in ACEN, you had to issue 200 million shares to ACEN. And ACEN, we understand, is also in a growth path. They will need funding. They might have to sell those shares, di ba? How is that going to happen? Can you give us an idea what you have done in the past? You had all of this exchange for asset for shares, and how was it done in terms of the placement, in terms of its disposition, and also to give us an idea what's going to happen to these shares of ACEN?
Okay. Well, in every placement we do, we really manage it very well. In the past, we've done this several times because we really do this placement in order for us to grow again, right? To infuse an asset. So there's really a purpose for this. We're not just selling down those shares, right? We're doing that in order to give room for AREIT to grow. We manage that placement quite well in terms of timing. We find the right timing. We find investors who are going to take up those shares. And I think in the past, as we've seen, after the placement, of course, there's a certain reaction on the price, but it also recovers. Particularly for this one, I would think that if next year the interest rates improve and at the yield where AREIT is trading right now, it's actually a very good yield compared to the the benchmark rates. So it's actually a good opportunity. Now for ACEN really, I mean, I'm not ACEN, but I won't speak on their behalf, but this transaction for ACEN gives them actually flexibility because they don't really have to sell those shares. By holding on to those shares, they're actually earning dividends that could actually be higher over time than the land lease rentals that they are paying to AREIT. So that alone will cover the lease rentals. They need not, they're not pressured. They have flexibility in terms of timing. And I would think ACEN is also very much aware that they will not sell necessarily at a lower price than the swap price, right? If the swap price was at 34, I guess that should be the minimum price also for them to be able to sell those shares.
And we don't expect them to dump it out in the market. I would imagine it will be placed with some strong hands or some institutional investors as well. Is that how it was done before?
That's usually how it's done, yes.
Okay. Sige. I hope that issue has been clarified. I also have some three.
And after all, at the end of the day, we're all within the Ayala group, right? We will do this we're all in the same family. So we will.
You're not going to hit yourself. You're not going to hit yourself. Okay. Sige. Let me just clarify certain things because you mentioned certain terms that may not be understood easily by others. Like, for example, cap rate. This cap rate, what does that mean? When you say cap rate, when you transfer assets to the AREIT, it's a certain assumption of a cap rate. Is that like a dividend rate? Effectively, that's the rate at which the shareholders now will earn?
Yes, it's an approximation actually of the asset yield ultimately. If we value the income based on a certain cap rate when we acquire the assets, so that's also the expected yield from those assets. And just to clarify, and I think I emphasized that earlier, the cap rate is really already net of expenses, of management fees, of capex. So that's very much close to the it's already close to the distributable income, the asset yield of those assets.
So this property with ACEN, your cap rate, I remember, is at 6.8.
Like 90, yes.
Yeah. So effectively, that asset, when you add to the AREIT, will actually give a 6.8%, more or less.
Yes.
Dividend also for the shareholders. Parang ganon.
Yes.
Yeah. Okay. That's okay. Now,
yeah, because those are good cap rates or yields now because we used to acquire assets at even lower, diba? 6.6 was last. So this is actually a higher.
And may tax pa yun. I mean, if you compare the bond rates, bond investors at 20% tax. Itong sa atin, dividend tax lang, di ba?
This one for individuals is 10% compared to 20% withholding tax from bonds, and if Filipino corporation, it's no tax.
Okay. The other term I hope you can clarify is the word accretive. I've been hearing that word accretive. Ano ba ibig sabihin yan? You just add it. Kasi, di ba, when you issue shares, dumadami yung shares. So, the original shareholders, ang daming ibang shareholders, dumadami. So parang feeling nila, the dilute. I think that's the reason why the share price dropped on the day that you announced that there's going to be 200 million shares. Parang the immediate reaction of the market, ano ba yan? Baka dumami yung shares na dilute kami. So, but you say it's accretive. What does that mean?
Okay.
Exactly.
So direct translation of accretive is additive, or it's an enhancement, or it's an improvement. Nag-Google ako ng definition ng accretive. You can Google that. In Tagalog, dumadagdag.
Oh, okay.
Nadadagdagan. Tama ba? Yeah.
Yeah. So no, on a per shareholder basis.
Yes. So I want to emphasize that it's not just accretive on a total income basis, but it's also accretive on a per share basis, because even as we add or infuse new shares, the total income divided by the total number of shares will still be an improvement.
Okay. So itong,
and you've seen that in the prior acquisitions. I think I showed a slide emphasizing that. I just couldn't read the numbers quite well.
So itong property na ACEN, once it's transferred, on that transfer, accretive kagad, or are you going to wait for a gestation period before you get anything out of it?
Yes. It should improve on the first quarter of the infusion, and once it's infused, as we've done in the past.
Okay.
On the same quarter that we've acquired assets. Last year was 22 billion also, and infused corresponding number of shares, and there was also an accretion.
Great. Sige.
We have to make sure we won't allow it not to be.
Hindi lang tatama. Sige. We have a lot of questions, Carol. If you can indulge us, no? We asked. Of
course, those are, just to qualify, those are for those new assets. Of course, there's always a question whether the other assets will continue to have the same level of income or growing. But I mean, if you saw naman the metrics, the occupancy, the contracted leases, I mean, it's very stable. So we don't expect naman any reduction from the current assets.
Sige. Oh, we got about 200 questions when we but we tried to group it together like what we did in COL Conversation. So we grouped them together. Let me go through it one by one so that we can tackle them. And if I can request you to just answer very briefly. I know you've tackled some of them already in your presentation, but maybe just to emphasize, and then you go through it very quickly. This is a question by Melvin and 8 other of our participants. How will the recent acquisitions affect the earnings per share and dividends per share? You said accretive, right?
Yes, that's right. Maybe just to add to that, in terms of timing, because they might want to know also the expected timing. So I mentioned earlier, Seda Leo in El Nido will be acquired via cash purchase. That one is very shorter to execute. So we're planning to do that first quarter of next year. So dun pa lang, there could be already an improvement in dividends, because these are an additional asset that will not require new shares. And then the rest, which will require some approvals and all that, will be towards the third quarter of next year, hopefully with all the regulatory approvals.
Yeah, good. So that's also the question of Rufino, Gerard, more or less the one I asked you, diba? So I guess, will the increase in outstanding shares increase dividends? The answer is yes. So next group of questions, public float. How and when will AREIT address the drop in its public float? Will it be by way of private placement or follow-on offering?
Typically private placement. That's how we've done it in the past 3 transactions. It was a private placement. And again, just to emphasize, there's no immediate timing to this. There's flexibility, because it will take some time also to go through the process, the application process for the asset for share swap.
Approval by the SEC. I understand. Yeah. Okay. Sige, next group of questions. We have, I think, about 8 or 9 groups here. So for the price drop, so of course they are very concerned. Why is the share price of AREIT plunging despite the seemingly good moves of the company? Asked by Ruel. I don't know if you can really give us maybe some idea why it does that.
There's, I guess there are other reasons why for some reason, but we are actually quite confident on the current income performance. I mean, you saw the numbers, the income performance is quite good, the stability of the company. We don't expect any reduction in income considering those long contracted leases. We have the acquisition next year that will boost the earnings of the company. And the assets are all flagship, excellent assets, guaranteed leases. So we really don't expect that. I think the recent price drop is not reflective of any risk or deterioration of the company's performance.
Yeah, because me as an investor also, I'm concerned. Additional 200 million and then another 640 million shares next year. So I guess that's really an immediate reaction. No? So, but once you've clarified it, it's not going to be dilutive and it's going to be accretive, then I guess I hope the Ruel and Rene is able to understand that. Next group, future acquisitions. Will there be additional infusion of assets aside from this last one? Asked by Leandro. And then another question by Victor, does AREIT intend to incur debt in order to finance future acquisitions? Maybe answer that sabay na, Carol.
Yeah, well, we're always committed, right, to we've done it every year, infusing assets. Somewhere, I think we infused 11 billion 2 years ago and then 22 billion last year. So yes, we do expect constant infusion of assets. As mentioned earlier, there are still a lot of assets in AyalaLand. It has a deep pipeline of commercial assets to infuse into AREIT once these are ripe for the REIT.
Is that the grand? Is that Carol? No, is that just to follow up? Is that the grand plan? I mean, at the end of the day, AyalaLand will just continue giving all of these assets as you move along. Ganun ba yun? Is that the?
Well, as I explained earlier, no, the position of AyalaLand, whether it's AREIT or in ALI, is neutral, but it through the REIT, it's able to do capital recycling. So its view on the REIT is actually very strategic.
Okay. All right. Sige. Thank you.
So on the question of the debt,
debt, yeah.
Yes, no immediate plans right now to borrow. We actually have excess cash, and that's what we will use to acquire the Seda Leo in El Nido.
So no need for financing yet. Okay.
We don't think kasi with the debt interest rates right now, it would be actually accretive because you also have to pay down more interest expense. So we'll wait for better times.
Yeah. Okay. Sige. Next group of questions, dividends. I think you explained this a lot, but can AREIT sustain its dividend growth? Did you mention like an automatic lease increase for all your assets?
There are some assets, those master leases that I mentioned. So master leases are when we acquire the asset, AyalaLand, the mall operator will now lease the malls from AREIT, or in the case of the hotel operator will lease, and even AC, the industrial land. So because of that, there are guaranteed annual escalations for those leases, long term and
so if you just keep your share now. In the question ni John Vincent, is it going to increase in the next 12 to 24 months? I guess the answer is yes, no?
Well, that's the expectation because we have contracted rents that are escalating. On the risk naman of vacancy, I think it's not a very big risk because we only have 7% of our leases expiring next year, and we expect majority of that to renew as well.
Okay. All right. Next growth outlook. Asked by Sheldon, what is the long-term outlook for AREIT and plans for expansion? You're now at close to 117 billion in assets by next year, no? Is there a number that you're looking at?
No specific number because it's really dependent on the readiness of some of these assets. But I think given the pace that we have and the pipeline of assets, we really want to reach close to 3 billion eventually. I guess it will be in over the next few years. So
$3 billion. $3 billion.
Sorry, $3 billion US dollars. Yeah.
Yeah. So that's about like
150.
Yeah. Okay. Okay. I hope that answers you, Sheldon, and even Arvin. Short term, you already know their plans. Short term, long term, that's 3 billion. Next group, industry. What is your outlook of the office industry given the work at home setup and high interest rate condition? I understand, Carol, the occupancy rate is looking at 18% vacancy rate right now, no? So
yes, that's the reported industry vacancy for office, 18%. But fortunately for AREIT, we've actually maintained a 96% occupancy from our office buildings, which is roughly the same as the previous year. So no significant drop in office occupancy that we've experienced within the properties in office properties in AREIT. And I guess I attribute that to the primeness of the office asset locations. They're in Makati, Quezon City, or in the case of Provincial, in the main IT park in Cebu. So in case locators do decide to downsize or right-size their office spaces, I guess it's strategic also for them to keep the more prime and most productive sites.
Good, good. Do you have pogos?
None.
No pogos?
None.
Okay, good. Sige,
Even
next.
for Ali, I mean, we hardly have any pogo tenants anymore in.
Yeah. Okay. Okay. No pogos. Next, AREIT. I guess this is on the stop. Is AREIT still good for long-term investment? Richard, what makes AREIT advantageous compared to other REITs in the Philippines today? Yeah, the second question siguro by Jorek is interesting. How do you compare your REIT with other REITs in the country today?
Okay. So compared to other countries, sorry, in the Philippines,
other REITs.
compared to, yeah. So far, I think it's fair for me to say that we're the only REIT that has really grown substantially since we listed as a REIT. We may have not started as the largest because we were testing it at the height of the pandemic. And we wanted to make sure really that we can do this and execute this well. But since then, we've really grown 3 times, as I mentioned earlier, to date, 3 times the size of our original asset base. The others really have not done so. I think also in our case, we have a good sponsor, the strength of AyalaLand, because it has a deep pipeline really that will support the long-term growth of AREIT. Obviously, a lot of the assets of AyalaLand are in very good locations. So there, I think that makes us different. And also, I think now that we are doing this diversification, that I think is a differentiation as well. Most of the REITs right now are concentrated in the office sector. We started that way also before, but we're very mindful of achieving a more diversified asset base to reduce really concentration risk.
So with the infusion next year, will you be the largest now? I mean, compared to the others?
I think in terms of total assets right now, we are the largest in terms of total assets.
Right now?
7 billion, yes.
Good, good. Sige. Do we still have a group? The risks. So what are the risks involved in investing in AREIT aside from this year, for example, interest rates? Now, I guess it's really the interest rate that really hit, most of the REITs, when interests go up, it becomes more attractive. So any other risks that you see for AREIT? Ask Manuela.
Yeah, I guess as you said, we have a good portfolio, stable, everything. We're infusing assets that are of good quality as well. But of course, there are macroeconomic externalities, sometimes out of our control, inflation, interest rates, and all that. So those could be the macroeconomic risks. Apart from that, I guess specific sector risks, like for offices, for malls and hotels. But I think for malls and hotels, very little exposure because we have a contracted lease, from the mall and the hotel operator. That's why I think it's good that we diversify the portfolio because it cushions these the impact of any risk in any particular sector.
Great. Can you help me recall? Nung pandemic, tinamaan ba yung office, right? Office occupancy?
For AREIT, no. We've actually maintained this range of 96 to 98%.
During the pandemic, even the pandemic, huh?
For the AREIT properties.
Yes.
For the AREIT properties. Of course, Ali kasi has a broader portfolio of properties. There are some properties that are not yet stable and not really fully leased yet. So the occupancy across the Ali portfolio is lower than that of AREIT for offices. However, I think we're almost back to 90% for Ali.
Mm-hmm.
So still relative to industry, still better because the vacancy of office sector right now is 18 to 20%. So even on an Ali portfolio, it's better than industry.
Great. Carol, it's already 3 o'clock, but we want sana to have you for a few minutes for live questions. Pwede?
Okay.
Yes, we have live questions, but Richard Daneda has been answering some of them. But we want to emphasize some of the questions that the others might be interested in as well. So from the Zoom, from John, why AREIT still infuses property, especially during hard times for the market? Why not just wait for the market to go up, then AREIT infuse?
Well, okay. I guess this question is pertaining because now the interest rates are relatively higher than where it was before. How we view this is that we're really committed to grow. The interest rates or some other factors in the economy will move, whether up or down in the short term. But we'd really like to focus more on the long-term value of owning real estate. And we believe if we have fundamentally strong assets, then any movement in interest rates or any macroeconomic factors should not really dampen or affect our decision to acquire and grow. And for AREIT, as you can see, the yields are improving. We used to acquire assets at 6 to 6.5%. Now our acquisition of flagship assets at 6.8% is great for AREIT.
Yeah, okay, good. Next question from our live Zoom tab from Kim. With our current interest rate and the government projecting that they won't be decreasing interest rates soon, what are you currently doing or planning to do about this? As if you can do anything about interest rates. So maybe on your assets, what are you planning to do about if interest rates remain high?
Yeah, well, I guess I partly addressed that earlier already, with the interest rate movements, and they're really focused on long-term growth. In the case naman of AREIT, regardless of movements in interest rates, our assets are stable since they have contracted leases, so we shouldn't really be directly affected by that. And I guess as an investor, if you will look at, take a long-term position on this, then these interest rates should be just a temporary concern.
Okay, let's get a couple more questions and then kasi we want to keep the time, From Dexter, isn't the average WALE, or I think this is weighted average lease expiry, of AREIT offices at 3.5 too low, given that office constitutes majority of AREIT's portfolio? How will AREIT address dwindling office occupancy when the rents are?
3.5 is actually good. It means on average, that's on average, right? That's the length of the lease term of the office contract. So some may be lower than that, but some are also higher than that, longer than that. I mean, we have office contracts as long as 10 years. But on average, I guess it's 3.5 years. And that's actually a good length of the contract, because hopefully also, with the office vacancy now being high and there's no new supply coming in, the expectation is in 2 to 3 years, eventually that should taper off. And by then, after maybe 3 years, if the supply is of the vacancy of the offices is lower, then maybe we can already benefit from increasing rental rates when the industry occupancy is higher. So
maybe, yeah, maybe Carol, maybe you can give some information to the, if you have any information about other REIT in other countries. Is the WALE 3.5 a good
I think so, because for office, typically, really the contracts are 5 years, renewable 3 to 5 years. So I think that's within the average.
Yeah. Okay. Take it. Next question. Why should I invest in AREIT when I can invest in AyalaLand? From Jordan. Well, you're both AREIT and AyalaLand, so can you try to answer this?
Well, I invest in both, definitely, because there are differences and there are benefits coming from both. AREIT provides you that recurring dividend yield, while AyalaLand will provide you with capital appreciation, and AyalaLand has a coverage of residential developments, land developments, and other allied businesses. AREIT is more focused on commercial and recurring income. So you can have actually a balanced exposure from investing in both.
Great, great. So I think that's about the time that we have. We promised you 1 hour lang, Carol, but we extended a bit. Can you give us maybe a last few words on what you can share with our audience today?
Yeah, okay, sige. I actually reserved that last slide and I asked them not to show it yet, but I want to show this again. And actually it's the same slide that I have used over and over again for the last 3 years, because in every investor presentation, this is really the core of our investment fundamentals, that AREIT has AyalaLand strengths as its sponsor. It has some of its primest quality assets nationwide. We have stable long-term occupancy. Our inflation, it provides inflation hedge growth with its dividends and growing dividends. And it is, I'd like to think, well managed by experienced and tenured real estate professionals. So I think these 5 elements define AREIT, and I believe are the same 5 elements that make a very good, solid REIT. So that's my last and final word, Marvin. And thank you again for hosting us today and for the valuable time of your investors.
Well, thank you also. Thank you also for your time, for explaining all of these things and trying to clarify the different words that we try to understand, so that our investors, this is what we do naman. We try to educate our investors to understand what's happening. Kasi, diba, naman eh. So I hope, Carol, will have you again. And hopefully, not after you announce the infusions, siguro before, we can at least educate investors to see what's happening to AREIT and probably AyalaLand as well.
Yes, thank you, Marvin. See you next time.
Okay, sige. Thank you. Allow me to just close this with some of my takeaways in this conversation. Very interesting with Carol, no? Very enlightening as well. And of course, we'd like to thank AREIT's executives today's event, and assure that we will continue to monitor developments in what they do. No? So to conclude, the REIT stock prices in total, not just AREIT, were the worst hit in the stock market, partly due to the pandemic affecting office leases, but exacerbated by high interest rates, which made investing in government guaranteed bonds a better alternative than REITs. But let's put things in perspective. No, we have emphasized before that investing in REITs is the investor's opportunity to generate income or dividends from rental properties in the most affordable way. Meaning, all you have to do is few amount of pesos, you can already participate in large real estate projects, more like AyalaLand. No, I mean, you are part owner of the properties, their crown jewels, as they say, Greenbelt 3, 5, Ayala Towers. You become a shareholder of that and earn dividends because they are required to distribute 90% at least by law to the shareholders. And with the way Ali is saying right now, or Carl was trying to explain, there isn't even any dilution whenever they contribute these assets. So that's going to be at least beneficial to shareholders for as long as they buy on long term. For AREIT, for instance, cash dividends continue to grow consistently ever since their IPO, as presented. In fact, due to the large asset infusion from Ali, which have been accretive to AREIT, this move continues to add to the dividends of AREIT shareholders. I took the chance of plotting them, and I think I have a slide here to show that if you bought the IPO at 27 pesos per share, dividend yields consistently increased on a per annum to, no? Yung 2020 kasi hindi pa buo yan eh. But if you kind of analyze the 2020, your dividend yield before an IPO is only 4.59%. That was okay because interest rates were lower at the time. But as they infuse assets, no, if you kept your stock at IPO, your yield continues to grow every year, 6.26, 7.50, and currently at 7.85%. Now, I don't know where you're going to get that kind of a yield, but if you compare it to bonds, it continues to grow. And they say that AyalaLand has given only about 50% of their offices, no, to the AREIT. So meron pang 50%, and they will continue to develop offices. And once it is mature, like what Carol explained, no, dun sa corner of Ayala and EDSA, once it has a good tenant, it continues to earn, they will transfer it to Ayala, to AREIT, and our AREIT shareholder will get the dividends out of that. And 25% pa lang of malls and hotels have been transferred to AREIT. So we may reasonably expect a continued increase in dividends for the coming years. And what's more, if and when interest rates start to decline, and we hear a lot of economists are saying maybe next year when the Fed cut rates, maybe second half next year, we don't know. But they are in consensus that rates have peaked and Fed and the central banks have already stopped tightening. Now, when interest rates go down in the bond market, investing in REITs may start to be really interesting because you will keep the dividend yield. You will keep that kind of a yield, and it will continue to rise when you infuse assets. And then investors will enjoy higher dividends and even now the potential for higher share price. Because ganun yan eh, nag-i-inverse yan eh. There is potential now for you to get a higher share price. So, but as a reminder to all of you, let's review what you already have in your portfolio and allocate appropriately depending on your objectives. As I always say, whether it is for capital appreciation or for dividends or for both, match it based on your goals. Investing is really invest as an objective. As we always remind everyone, invest for the long term. Stick to fundamentally sound companies with strong track record, with years of consistent profitability, and just hold on for the long term and you will be okay. As we say in CMI, that's investing simplified. No? So with this, hope we'd like to thank everyone for watching, for tuning in, and for you to participate in some of our call conversations. I suggest you sign up so that you will be automatically invited through bit.ly/callcon sign up. So that has been an interesting afternoon and a very interesting discussion with AREIT. I'd like to thank everyone for watching. This has been Marvin Fausto. See you in our next conversation.